section 80 EEB. Inserted by Finance Act 2019. Who is eligible for deduction under 80 EE? We are going to discuss. EEB, sorry. Person eligible for deduction is an individual, any individual. Next is nature of deduction. Nature of deduction. Deduction under this section is in respect of what? It is in respect of interest. Interest on loan. Which loan? Loan taken for the purpose of purchase of electric vehicle, for the purpose of purchase of electric vehicle. Interest on loan taken for the purpose of purchase of electric vehicle. So, the deduction is in respect of interest on loan taken for the purpose of purchase of electric vehicle. What is the quantum of deduction? The quantum of deduction is interest on loan supra or rupees 1,50,000, whichever is less. 1,50,000, whichever is less. Interest on loan supra rupees 1,50,000, whichever is less, will be allowed as deduction. Now, bar on double deduction. That means, what is bar? Bar means restriction. Where the deduction was already enjoyed for this interest elsewhere under any other provision, then you cannot enjoy deduction for the same under 80 EEB. So, if you enjoy deduction here, you cannot enjoy deduction for the same interest under any other provision. If you have enjoyed under any other provision, you cannot enjoy here. Conditions for availing deduction. There are some conditions for availing deduction. Condition number 1, loan should have been taken from, it is not loan from anybody, loan should be from bank or a deposit taking NBFC, or from a deposit taking NBFC. It is from a deposit taking NBFC or a systematically important non-deposit taking NBFC. It is from systemically, sorry. In my material it is wrongly typed as systematically. Systemically important, systemically important non-deposit taking NBFC. Non-deposit taking NBFC. What is systemically important non-deposit taking NBFC will discuss. Loan should be from whom? From bank or from deposit taking NBFC or a systemically important non-deposit taking NBFC. Condition number 2, the loan should have been sanctioned during date of sanction of loan. Date of sanction of loan should fall during 1st April 2019 to 31st March 2023. So in this period loan should have been sanctioned. Then the interest is available. Fine. Now we need to know meaning of two things. One is systemically important non-deposit taking NBFC. What is that? Systemically important non-deposit taking NBFC. It is basically an NBFC, non-banking finance company, which is not accepting or holding public deposits. Holding public deposits and which is having total assets of not less than 500 crores, not less than 500 crores as per the last audited balance sheet and which is registered with RBI. Registered with RBI. This is systemically important non-deposit taking NBFC. It is not accepting or holding public deposits, and which is having total assets of not less than 500 crores as per the latest audited balance sheet, and which is registered with SEBI. Then you should know the meaning of electric vehicle. Electric vehicle is defined this way, too technical. Electric vehicle means a vehicle which is powered exclusively by an electric motor. Electric motor whose traction energy is supplied exclusively by traction battery installed in the vehicle. And it has such electric regenerative brake system which during braking provides for the conversion of vehicle kinetic energy into electrical energy. That way you need to note. So it's a vehicle which is powered exclusively by an electric motor whose traction energy is supplied exclusively by traction battery installed in the vehicle, and it has such electric regenerative brake system which during braking provides for the conversion of vehicle kinetic energy into electric energy. So this is section 80 EEB. So there is a logic in grouping two sections, 80U and 80 DDB disability, 80 TTA and 80 TTB interest, 80E and 80 EEB interest. Once again, that is interest income, this is interest payment. That way. Finance Act 2019 amendment, contribution to additional account under new pension scheme. Contribution to additional account under the new pension scheme is also eligible for deduction. Now let us elaborate this point number E. Note. See, under the new pension scheme, there are two types of accounts. There are two types of accounts. One is tier 1 accounts, another is tier 2 accounts. Tier 2 account. Contribution to tier 1 account is qualifying for a deduction under 80 CCD. Contribution to this account eligible for deduction under 80 CCD, which we have already discussed. Contribution to this account is eligible for deduction under 80 CCD. Whereas contribution made to the tier 2 account, this is also called additional account. This is the additional account under the new pension scheme. To this account is eligible for deduction under 80C. Contribution to this account is eligible for deduction under 80C. This is Finance Act 2019 amendment. Now, this is available only to government employee. Contribution to additional account under the new pension scheme is eligible. This is note 1. The deduction, okay, in this regard is available only to the central government employee. Deduction under section 80C in respect of tier 2 account is available not to all, it is available only to central government employees. Is available only to central government employee. Okay, only to central government employee the deduction is available. Mark this important, this could be tested. This is Finance Act 2019 amendment. Section 80 JJAA. First of all, we shall know who is eligible for deduction. Person eligible for deduction. Any assessee, need not be only individual RHF, any assessee whose gross total income includes profits and gains derived from business, whose profits and gains, gross total income includes profits and gains derived from business, and who is a tax auditee under section 44AB. Tax auditee means the books of accounts are to be audited for income tax purpose. Under which section? 44AB. So, assessee should be a tax auditee and his gross total income should include profits and gains derived from business. Then that assessee is eligible for deduction under 80 JJAA. Next we need to discuss nature of deduction. Deduction is allowed in respect of what? Under this section, deduction is allowed in respect of what? Deduction is in respect of additional employee cost deduction is in respect of what? Additional employee cost incurred in the course of business. Incurred in the course of business. We will know who is additional employee, what is additional employee cost in few minutes. The deduction is, this section is basically to encourage business entities to generate employment. So, the deduction is in respect of additional employee cost incurred in the course of business. Sorry. What is the quantum of deduction? Quantum of deduction is 30% of employee cost, 30% of additional employee cost. %30 of additional employee cost. This is the deduction. Note. Entire employee cost being an expenditure wholly and exclusively incurred for business, wholly and exclusively incurred for business. Entire employee cost being an expenditure wholly and exclusively incurred for business is eligible for deduction under 37(1) while computing income under the head PGBP. In addition, deduction is available under 80JJAA in respect of additional employee cost. This is over and above what we have enjoyed in 37(1). That is there. In addition, we get deduction under 80JJAA. We get deduction under 80JJAA. This you need to note. This is regarding the quantum of deduction. Next is period of deduction. For how many years the deduction is available under 80JJAA? The deduction is for 3 consecutive assessment years. The deduction is for 3 consecutive assessment years. Starting from assessment year in which deduction is claimed for the first time under 80JJAA. Three consecutive assessment years starting from the assessment year in which the deduction is claimed for the first time under 80JJAA. Under 80JJAA. For 3 years the deduction is allowed. Fine. So the quantum of deduction is what? 30% of additional employee cost. 30% of additional employee cost. So we need to know, okay, meaning of additional employee cost. You should know the meaning of what? Additional employee cost. Additional employee cost means the total emoluments. Total emoluments paid or payable to additional employees employed during the previous year. So additional employee cost is nothing but total emoluments paid or payable to the additional employees employed during the previous year. This is additional employee cost. Then here you need to know 2 things. who is an additional employee, then what do we mean by emoluments? What do you mean by emoluments? So, the next we will be discussing emoluments. What do we mean by emoluments? Emolument na, here any sum paid or payable to an employee in lieu of his employment so paid or payable to an employee in lieu of employment. Note, it covers only monetary payments because paid in kodrukku. It covers only monetary payments. Fine. Next is, there are some exclusions from emoluments. Exclusions. From emoluments. Following are not to be considered as emoluments. Exclusion number 1. Contribution by employer to pension fund, provident fund, etc. This is not to be taken. Next is terminal payments like gratuity, severance pay, leave encashment, voluntary retirement compensation, commuted pension, etc. These are all not to be treated as emoluments. Not to be treated as emoluments. For this purpose. Next is, you should know the meaning of additional employee cost. Additional employee. You should know the meaning of additional employee. Additional employee means employee who has been employed during the previous year. During the previous year and whose employment has the effect of and whose employment has the effect of increasing the total number of employees employed by the employer as on the last day of preceding previous year. We'll give you an illustration. Who is an additional employee? Additional employee means an employee who has been employed during the year and whose employment has the effect of increasing the total number of employees employed by the employer as on the last day of the preceding previous year. To visualize, we'll give you an example. See this example. Total number of employees as on 31st March 2019, last day of the preceding year, 100, case 1 vachupom. Employees resigned in the year 1920. Who resigned in previous year 1920, 30. Then newly recruited in previous year 1920, 25. Now what happens? Total number of employees is 1 minus 2 plus 3, which is 95. Then the additional employee is 0. Why additional employee is 0? Because appointing 25 employees doesn't increase the count beyond 100. In fact, it is less than 100. Case number 2. Total number of employees as on 31st March 2019 is 100. Number of employees resigned in the year 30. Newly recruited in the previous year 45. Upon the total number of employees becomes 115. The additional employee is 15. Though you have appointed 45 employees, okay, see the count goes beyond 100 only to the extent of 15. So therefore, whose employment has the effect of increasing the total number of employees employed by the employer as on the last day of the preceding previous year. So 100 has become 115. So out of 45, only 15 is considered as additional employee. Fine. Now we are going to discuss, okay, the exclusions from additional employee. Certain employees will not be treated as additional employee. Exclusions from additional employee. Number 9. Exclusions. from additional employee. Following are not regarded as additional employees. Exclusion number 1. Employee whose monthly emolument is more than 25,000, that employee will not be treated as an additional employee. Exclusion number 1. Employee who doesn't participate in provident fund scheme, casual labor, contract labor, not additional employee. Exclusion number 3. Employees employed during the previous year for less than specified number of days, for less than specified number of days. Now we need to know what is specified number of days. So exclusion 1, employee whose monthly emolument is greater than 25,000, not treated as additional employee. Employee who doesn't participate in the provident fund scheme, contract labor, casual labor, they are not additional employees. Employee is employed during the previous year for less than specified number of days. Specified number of days na enna? Specified number of days. It all depends upon the business carried on by the assessee. Space is not there. We'll continue in the next page. Connector. Business of the assessee is manufacturing of apparel, or manufacturing of footwear or leather products. Manufacturing of footwear or leather products any other business there manufacturing apparel, the specified number of days is 150 days. Manufacturing of footwear or leather products 150 days. Any other business 240 days. Any other business 240 days. specified number of days depends upon the business carried on by the assessee. Sorry, now we have an amendment brought out by Finance Act 2018. Very important, could be tested. Excluded employee category 3 shall be included in the subsequent previous year. Should be included in the subsequent previous year. Excluded employee category 3 shall be included in the subsequent previous year. For that, I will give you an example. See, if the employee has worked for less than 150 days or 240 days respectively, okay, even though he is excluded in the year of employment, he will be included, okay, in the subsequent year. Example, Assassi is A Limited engaged in the business of manufacturing footwear. Engaged in the business of manufacturing footwear. Now, take the story for the year 1920. For the year 1920, number of employees at the beginning. Number of employees as on the last day of the preceding year, 100. Number of employees, 100. Employees resigning the previous year 1920 is 20. 20 employees are resigning. Number 3, newly recruited employees. Newly recruited employees employed for 150 days or more. In the previous year 1920, 20 newly recruited employees employed for less than 150 days. In the previous year 1920, how many employees? 50 employees. 50 employees. So these are all the details. Now, the total strength of employees is 1 plus 2 1 minus 2 1 plus 3 plus 1 plus 3 plus 4 minus 2, which is 150 employees. 150 employees. However, additional employees employed in previous year 1920 is 0. Why? Because these employees are not considered in computing additional employees. These are not considered in computing additional employees. Why? They are employed for less than 150 days. So 120 left, 20 joined. So therefore no increase. Additional employees 0. No deduction under 80 JJAA. This is the conclusion for the year 1920. For the year 1920. Come to the next year, that is previous year 2021. Previous year 2021. Here, first point, number of employees as on 31st March 2020, last day of the preceding year, 100. Newly recruited during the previous year, newly recruited during the previous year, 2021, 30. Then employees recruited in previous year 1920 but excluded in computing additional employees, for previous year 1920, since they were employed in that previous year for less than 150 days. How many? 50 we should add. Employees recruited in previous year 1920 but excluded in computing additional employees for the previous year 1920 since they were employed for in that previous year for less than 150 days. Those excluded employees are there, na? 50 employees. They are considered as newly recruited during previous year 2021, considered as newly recruited during 2021. So we add it. So the total strength of the employees is 1 plus 2 plus 3, 180. 180. So additional employees, how many? 80. Additional employee is 80. So in this year deduction is available under 80JJAA. Deduction is available under 80JJAA. This you need to understand. So what we are discussing is the exclusions and inclusions. Exclusions and inclusions. Note, in the very first year, all employees employed are additional employees. Note, the first year of operation, all employees appointed are treated as additional employees, treated as additional employee. Then there is one more exclusion here, exclusions from emoluments. Exclusion number 3 is there. I can add here exclusion number 3. Emoluments paid otherwise than by way of account payee check or account payee bank draft or by use of electronic clearing system or any other electronic mode as may be prescribed. If you are paying emoluments otherwise than by way of account payee check, account payee bank draft or electronic clearing system or any other electronic mode, that is to be excluded. This is exclusion number 3. So if you are paying in cash, that is not to be considered as emolument only, is to be considered as emoluments. However, for the first year of operation, emoluments paid in cash is not excluded. It is not excluded for the first year. For the first year of operation, emoluments paid in cash is not excluded. Simply here I am adding only 2 points. What are not to be treated as emoluments? One exclusion is emoluments paid otherwise than by way of account pay, check or account pay, bank draft, electronic clearing system or any other electronic mode as may be prescribed. Okay, Finance Act 2019 amendment. But for the first year of operation, emoluments paid in cash is not excluded. It is still considered. It is considered. That you need to note. Fine. So what we are discussing is provisions of section 80 JJ AA. Okay, next is point number 12. For claiming deduction under 80 JJAA, a report should be obtained from chartered accountant. A report should be obtained from chartered accountant. Point number 12. Report of CA. For claiming deduction under section 80 JJAA, the assessee shall furnish a report of chartered accountant in form 10DA containing prescribed particulars. Prescribed particulars. Then following points are requiring attention. The business which the assessee is carrying on, business should not have been formed by splitting up or reconstruction of an existing business. The business should be new. Note number 2. Business should not have been acquired by way of transfer from any other person. That means you should create the business from any other person or as a result of business reorganization. Business should not have been acquired by way of transfer from any other person or as a result of business reorganization. It should be a business which is created by the assessee only. Fine. With this, we are through with section 80 JJAA. To visualize one problem, we will do from the institute study material. Illustration on 80 JJAA. assessees Mr. A is in the business of manufacture of computers, engaged in the business of manufacture of computers, is engaged in the business of manufacture of computers, not footwear, not leather products, not apparel. That is to be noted. Date of commencement of business. Date of commencement of business is 1st April 2019. The current year only the business is started. Employee details are as under. Employed 350 employees during the previous year. Whose details are as under. Employed 350 employees during the previous year, whose details are as under. Number, see this table, serial number, number of employees, date of employment, whether the employee is regular or casual, emoluments per month. These are the details available with us. "75 employees were appointed on 1st April 2019. Regular. Monthly salary 24,000. 125 employees, date of employment 1st May 2019. Regular. 26,000. 50 employees, 1st August 2019. Casual 25,500. 100 employees appointed on 1st September 2019. Regular 24,000. Casual employees, they don't participate in Provident Fund. Do not participate in Provident Fund schemes. Regular do participate. Profits from this business is 75 lakhs. The turnover from this business is 2.16 crores. Since the turnover is more than 1 crore, Mr. A is a tax auditee under 44 AB. Certainly his books of accounts are to be audited. If you are a businessman, your turnover from the business is more than a crore, then you are supposed to get your books of accounts audited. So these are all the facts. Now required quantify the deduction under 80 JJAA. Quantify the deduction. There, first point, assess is a taxability. Gross total income includes profits from business, correct? Now we need to quantify the deduction. First step, determination of additional employees. Determination of additional employees. Total number of employees employed during the previous year. 1920 is 350. There you should exclude casual employees first. How many? 50 gone. Next is employees whose monthly emoluments exceed rupees 25,000. 125 employees, that should be removed. Correct? Next is hundred employees are appointed on 1st September. September, October, November, December, January, February, March, 7 months. Put together, they have employed for only less than 240 days. Employees employed for less than 240 days. 100 shall be excluded. अर्थात 75 employees only regarded as additional employee. Additional employee is equal to 1 minus 2 minus 3 minus 4, 75. Additional employee cost, 75 employees into 24,000 into 12. That is the additional employee cost. Here, which is 216 lakhs, 30% of 6 is the deduction under 80 JJAA, which is 64.8 lakhs, which is what? 64.8 lakhs. Fine. This is how you need to do. Illustration number 2. 1 is over, 2. Import the facts from illustration 1. Import the facts from illustration 1. The only change in facts is Asas is engaged in manufacture of footwear. Asas is engaged in manufacture of footwear. In that case, additional employee is equal to 175. Additional employee is what? 175 employees will be there. Correct. Before that, I should tell one point. These 100 employees will be treated as additional employees for the previous year 2021. For the previous year 2021. This year they are excluded, but next year they will be taken. Sorry. Additional employees 175. Additional employee cost, I shall determine. Why it is 75 plus 100. Employed for more than 150 days. Employed for more than 150 days, not 240. Though less than 240, more than 140. So they are considered. Why? Because footwear business, it is not 240 days, it is 150. Employed for more than 150. So 75 employees into 24,000 into 12 plus 100 employees into their salary 24,000 into 7. Right from September only they are appointed. Na? September, October, November, December, January, February, March, 7. So the total additional employee cost is this, which works out to 384 lakhs. Deduction under 80JJAA is 384 lakhs into 30%, which is 115.20 lakhs. This will be the deduction. Fine. With this, our discussion on 80JJAA is over.